What is going on, team? Good afternoon. We're going to talk some common sense today, if that's all right with you. Number of things happening in the market. This is going to be a shorter video, but we're going to hit on a couple of things. And the reason why, inflation is really the culprit for everything negative that's happening in the markets and a lot of the fear that's out there. This is something that we've been chronicling, and I'm going to show you again how the mortgage bond chart continues to follow the pattern that I've been talking about, that I've been expecting for mortgage rates, as mortgage bonds have really kind of leveled off, but that has allowed rates to sort of slowly get better as mortgage banks get more and more confident that huge drops in bond prices are behind us, because that was what really had everyone on edge. That's what really had the hedge, pumped up, and that is now sort of something that is being challenged by competition. And so banks will get out their pencil, especially when volume comes down. They'll look at ways that they can cut costs, shrink margins, bring a better rate to market. That's what's great about being a broker, is you get to really participate in seeing that happen when it is happening. So I do want to say one thing. I was going to make this whole video about lock and shop, but this inflation information and what's happening in the media, the message that people are receiving about real estate and about rates and everything is just, it's wrong right now. And so I've got to tell you what is actually happening so that everyone can disseminate this information to your friends, to your family. You got to tell people what's really going on. The information that is being received by the public is inaccurate. The perception of the public about real estate, about what's happening in the markets, is inaccurate. I know people have seen softness. I know agents have called me with crazy things like, wow, this listing doesn't have any offers on it after 2 weeks. And, when you hear that stuff, it's just kind of like, well, that's not too unnormal in a more normalized market. It's certainly nothing to panic about. That's for sure. Will it create an uncomfortable conversation with your seller? Maybe so. We have to talk about a price improvement. But does that mean the market's crashing? 100% it's not. 1,000% it's not, and it's not going to. So we're going to talk about some of those things today. Lock and shop. You can do this. It is a good idea. I still recommend it. We're going to look at interest rates here. Let me get myself out of the way. Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Call, text me, shoot me an email if you want to buy or refi. Quoted one today, saving this couple a ton of money. We'll get to these stories here in just a second. Let's look here. Now, you know me, I'm not a big victory lap guy. Okay, I am. But that said, this right here, we've been talking about this reverse head and shoulders that's setting up. What did I say was my expectation is that we're going to see bond prices get up into here and form us the other shoulder. Now, if that happens, it's the best, one of the most strongest reversal patterns that exists in technical analysis. Technical analysis is not always right. And I'm not like a professional technical analyst, but the stuff that happens with bonds, the stuff that happens with corn, there's things that trade slowly. Bonds, one of them, most of the time. And so things set up very slowly. It's very easy to see. You don't have to be a genius. I'm not day trading this. But long story short, that reversal pattern would lead us to believe that, hey, rates are going to head lower. Maybe that's in a month or two. Maybe it's only 0.5%. Maybe it's not a huge deal. But that's good. That's good for banks who are pricing out mortgages. This also could be wrong. Could be dead wrong, could be a failure, could be new information that comes to the table, and rates and bonds can go down and rates can go up. So we're still encouraging people to lock right away, and that's why I talk about lock and shop. Lock and shop, we have multiple lenders that are doing this on the broker side now. I know there's been a few mortgage banks that have been doing this for a while. There was a couple leaders in that space as far as setting it up. Now you can lock your rate for up to 180 days without having a property identified yet. And that's pretty amazing. So if you are in a situation, this is really good. People who know, hey, we know we're going to want to sell our home in July and buy another one concurrently, but we really have no idea anything other than that. Okay, let's do a lock and shop. Let's get a loan locked for you. Get your application in, lock in a rate, okay, give you a runway. If rates improve in the meantime, who cares? We'll flip banks when the time comes. If rates get worse, though, you're protected. So I do recommend that right now. I do think it's a good idea to go ahead and do that. whether you're doing your loan with me or someone else, ask about Lock and Shop. Ask about that program and just go ahead and pull the trigger. If you're going to buy a home and you know it, get something hedged in the market because things can change. They can change quickly, and sometimes it's not so pretty.
Yeah.
So trust me on that one, okay? Now, let's go and let's look at some data points here. Let's look at some basic stuff. The market's, kind of been all over the place. We have Fed minutes that point to more rate hikes go further than the market anticipates. Now, these minutes, for me, this is just a setup. This is a setup. The minutes saying, hey, we're ready to just get crazy with this and drop hammers left and right. Fed minutes released Wednesday indicated that officials are prepared to move ahead with multiple 50 basis point interest rate increases, which really isn't that much. It's one tick above the minimum. I mean, the minimum is 25 basis points, so one tick above the minimum is not that much, PS. But that's okay. They're also, in addition, FOMC said policy may have to move past neutral into restrictive territory. Hey, whoa, dang. We haven't seen or heard anything like that in a long time from the Fed. Minutes indicate that members are hopeful that they can bring down inflation, but also concerned about financial stability risks. And yeah, inflation, obviously a problem. Now, what have I been telling you about the Fed? What do we know about the Fed? They're always a day late and a dollar short. This is the exact information they should have been saying a year ago. But because they look backwards, they're backward looking at data, they're just now coming to this conclusion, which should have been implemented a year ago. So what's happening is the market is smarter than the Fed because the market's real. The Fed's just a bunch of people in a room. The market is real and it's happening right now. And so the market is right. The Feds are trying to predict the market or control the market. They're not working in tandem. That's important to understand. Now, with this revelation of the Fed, pretty much means that, hey, if there is a way to put out the inflation fire, they're going to go for it. Great. That should give confidence to things that hate inflation, like mortgage bonds. This is good, right? Now let's take a look at this. So the Congressional Budget Office boosts their U.S. GDP growth estimates. They say inflation has topped. Now, I'm not telling you we can 100% trust the CBO. I'm not saying that. But this is definitely interesting territory because that's what I was saying last week, right? When we were looking at this chart, we're going, hey, is the worst behind us here? Have we seen the worst? Is there any new data point? Is there any new situation that's coming that isn't priced into the market yet? The only thing I think that isn't priced in is Fed reducing balance sheet, Fed selling bonds, which I don't think the market believes that will happen. I don't believe that will happen. I think they're bluffing. And so, but that could change, right? If they do come in and start dumping bonds, that would crush everything, which is why I don't think they'll do it. That said, CBO is saying inflation has topped and now it's going to start coming in. We're going to boost our GDP estimates based around this 2% inflation by 2024, which is a couple years from now. Hey, that is a really, really positive sign for things. This one, I don't subscribe to this club, but this headline is worth all you need to know. Cisco Systems CEO says no demand signals of an economic recession. This is important. Remember, sentiment is what we've been talking about. The sentiment, and so I'm going to get to why everyone's got it wrong here in just a second. These are just a few things from today I want to cover, and then I'll explain to you why people are getting it wrong. And it's not their fault. It's just bad information. It's bad assumptions. Cisco is not necessarily, we talked last week about how Target and Walmart missed quarters, which is very rare, and it scares people. But if they missed like 3 quarters in a row or something like that, or they guided for like 50% guidance for the next quarter or something crazy like that, then you would say, oh, wow, they really see something going on. But they just cited, hey, increased in costs, the effects of inflation. The effects of inflation were what kept their quarters somewhat muzzled. But neither one was really saying that there's anything crazy going on, and they just need to work harder and get more efficient. That's what's great about the market. if there is a problem in the market will get efficient to it. So this isn't necessarily a huge deal, but it's not bad either. And it reminds us, we should be asking ourselves, what signals do we have? Because rising interest rates isn't a signal. Inflation isn't a signal either for recession. You have negative GDP growth and employment. So GDP, employment. Those are the things you really should be looking at. Employment numbers are still very, very strong. Still way more jobs than people unemployed based on the numbers. So that part is in good shape. But here is where the issue comes in. And I'm going to absolutely beat this drum. Right now, you're watching this video, maybe you're subscribed to this channel, you know that interest rates have actually improved, even though bonds haven't changed much. If someone's just watching the 10-year, for example, maybe they wouldn't know this. We were quoting, high balance VA and FHA in the high 4s for a while. Remember that? We were pulling rates. Now we're looking back into the low 4s. So especially for those government products, conventionals have come down to low 5s, even high 4s in some situations is possible there. We did quoted a cash out today. Conventional cash out, high balance, just everything going against it from an interest rate perspective. And high 5s, that's not bad. That's not as bad as what people are thinking, because the information that's being promoted is that rates have gone up. Fed raises rates. Fed's going to raise rates more, right? What does this article say? Fed prepared to raise rates. And that's what people hear. So they think that rates are really high. I've quoted a few payments here in just this week where people were like, oh, wow, that's totally doable, showing that their expectations have been projected to a much worse situation than what reality is. Projection is, hey, this is going to be really bad. Oh, it's not that bad. So a lot of people, unfortunately, have exited the market just because they heard a few of these data points, and they've said, we're exiting the market. We're going to rent, or we're going to wait. We're going to hope that prices come down. And while that is possible, it's totally possible that prices could come down, especially in certain areas a little bit. I do not think you're going to see anything even close to a crash, maybe not even a county-wide correction, which some people have been predicting. It's so much more bullish than what the average person believes. Now, we are seeing some things. We got one in contract yesterday under list price. Pretty cool. Detached home, nice size lot, listed for $715,000. We got in for $707,500. Offered $700,000, met in the middle. That's how it should be. I love this market. This is great. Now, I work with buyers, obviously, but that's a great market. When someone who wants to buy a house can go out, make an offer a little bit under the list, meet in the middle, and be in escrow in 24 hours, that's a great situation to be buying a house in. You know what's not great? When you make an offer $50,000 above list price and 32 people have higher offers than you do. That's not cool. That's not even fun for anybody. So the mania may be over. Normalcy, normal market in San Diego real estate is still very seller bias, and it probably always will be. Or at least the vast majority of the times it will be, unless it's a unique property or unique situation. What we have seen, though, is there's been a few comp bombs. There's been a few sellers who were a little bit desperate. Maybe they're already in escrow on something else. Their buyer fell out. Things changed since their buyer got in, 30 days later, and they didn't really have the ability to get the same kind of offer. So they're taking something for $50,000 less or $40,000 less than what that first buyer was in escrow on. So and that's not even really a comp bomb, but it's just someone who's not able to maximize the market. And that's okay. Those things are going to happen. That seller is making a decision. And that's the one thing that makes the market a little bit fragile, is that people can take 30 or 40 or 50,000 less than what they're asking and still have a major profit on their hands because prices have gone up so much. It makes it a little bit easier for someone to take less if they get in that situation. So that is really more than likely what's going on with when you see a home that sells for less than what you think it maybe should, It's more than likely something like that and not a panic situation. It is not a seller who's going, oh my gosh, we have to sell. We have to get out of here. We have to do this. We have to do that. It's all going to hell in a handbasket. That's not what's going on. Fundamentals still super duper strong. Inventory while increasing, and we've chronicled that. We've noted that. We've paid attention to that. Inventory increasing. Let's think about what is the next phase. What does the next couple 3 months look like? Well, I think there's two different possibilities. And it's going to be very interesting to see. Let me get myself out of the way. So we talked about interest rates. Now, we're building up some inventory right now. What would happen if interest rates dropped 0.5%, 0.75% from where they are here? What if we went back to the mid threes or something like that here in the next couple months? I would probably get several EPOs. Hated it. That would suck. But it would spur a lot of activity. Now imagine if rates drop and we actually have inventory. What's going to happen? It's going to be game on, Donkey Kong all over again. We'll be right back where we were, except for we'll actually have inventory. We'll have houses to sell. And the agents who are hustling will crush. They'll crush because there's actually inventory. There's numbers. There's units out there. It's been so thin. It's been so tough. So that's one scenario that I'm looking at and kind of thinking this is more likely than not at this point. Inventory will build. As rates dip, buyers will start to win again. They will get back in the saddle. There's people who are getting back in the saddle. I had a couple just today. 2 different people who had been pre-approved when rates were much lower, back on the saddle today. And that's always a good sign, in my opinion, that they have gone, and this is what I was talking about last week. People will say, okay, well, we're just going to go rent. And then they start going through that process. And then what happens? They have to come back because they realize, like, okay, that was no better. In fact, that was worse. That's terrible. We're going to go pay $4,000 a month to the toilet. Check, please. And the house wasn't even that nice. In fact, it was all jacked. So they'll go and experience that and see what's out there, and then they'll come back to the buying table once they realize it's not really any better. In fact, it's much worse overall. So that I'm still expecting to happen. So we have some people who have sort of, they've wandered into the rental space a little bit. Those people will come back. A bunch of buyers will come back when they start. Just all they need to do is call me and get a payment quote right now. That's what needs to happen. Anyone who's been discouraged in the last month or two, call and get a payment quote. Find something you like online, send it to me, and let's do a payment quote for you. And let's see if you like it. Let's see what you think about it. Let's talk reality. Let's not let the news telling us that rates are going up and new home sales are down and all these different things. You're hearing these things. Everything is being compared. All the data points, all the media, everything is being compared to last month, last year, when we were in a frenzy. Okay, you're not getting a comparison of now, which is a little bit more normal. This is actually a great time to buy. A little bit more normal versus the crazy time. We're not comparing normal to normal. We're comparing right now more normal to back when it was cray-cray. And so it's giving this false sense that things have gotten bad when really they've just gone from manic, we're all crazy, to, okay, maybe we're not all crazy. Now it's a little bit more normal. So that transition is very healthy, very good. It's a great sign for so many reasons. And just the setup here, I'm telling you, looks good. It looks good. Never know what could happen. And you should never try to buy a home based on when interest rates are at whatever. That's not the way to go about it. You want to buy a home when it makes sense for you to move, when you know where you want to live for a long period of time or where you want to own for a long period of time. Then you buy. Rates improve, you refi. Simple. You don't have to worry about that. Rates get worse, don't worry. You're locked in. Get yourself a fixed rate. Boom. But this opportunity for rates to drop is getting very, very real here. And I don't think it'll be like a rocket ship. I think it's going to be slow and steady. That's even better. That's even better. I don't want rates to drop 0.5% overnight. That's not what we want. We want to see healthy, steady, big buyers coming in and just bidding for these bonds. That's what we want to see. But we do have some hurdles to get through. So let's see what happens. But note, the Fed is behind. This is why we can't trust them. They're not forward-looking, they're backward-looking, so they're never going to prevent anything. They're only going to put out fires that they can see with their eyes. They're not going to put flame retardant on the ground. They're going to come with hoses once the fire's there. Not what they should be doing, but it is what they do. And as of right now, Congressional Budget Office is saying that inflation has topped. We've seen the worst of it. And that's possible. That's possible, which would be a very good sign. Okay, one more thing here I wanted to talk about, crypto side. So there's been some stuff going on in crypto, crashes, things that have been everyone's been asking me about this stuff. So I'm just going to cover it real quick. You can see the range. This is Bitcoin. It's the only thing I care about really. In a downtrend for sure, unmistakable bear market, currently forming sort of a bear flag here. It doesn't look good, but we're in this range, been in this range for quite some time, in the middle of it right now. It's just having a hard time breaking out of this. Will most likely break to the downside. If you are in crypto, it's entirely possible that there's a lot more downside coming. Does that mean you should sell? I mean, it's up to you. But for people who are accumulating long-term like myself, you look at things like this, the reason why I like to DCA, dollar cost average, I buy every week. And that way I don't worry about it. When it's lower, I get more Bitcoin for the money I'm putting in every week. I get more sats, if you will. So I'm not worried about it. My thesis is all about getting through to January 2025. So that's 2.5 years from now. So I don't care what happens in the meantime. I've accepted the fact if it goes to zero and I lose it all, I've accepted that. I made my bet. I've made my plan. I'm sticking to my investment strategy with it. And I think for a lot of people, the same thing could be said. Look at stock market. I mean, just, when this is the Dow Jones. In a downtrend, remember we were pointing here, we were showing you, hey, we got this downtrend going, and it's been respected on both sides. And look what happened. Stepped out of it here to the downside, right back in it. So, will that continue to go down? It could. I never recommend just selling everything. If you are smart enough to know when to do that, then you don't need to ask me. And most likely, your best bet, if you ever feel like, the stock market's too high or, Bitcoin's too high or whatever, and you want to lighten the load, you want to be selling when you're at highs and everyone is euphoric. That's the time you want to sell. You don't want to be selling when everyone is liquidating themselves out of pain. That's not the time to do it. And that's just historically speaking, that is not best practice. So I would not recommend that. Historically speaking, when people are in pain, when people are considering liquidating themselves and selling just to stop the pain, that's usually when you want to start buying in. So like for people super jealous of anyone who has never bought any Bitcoin or anything like that, what an amazing opportunity and time to get in and start actually accumulating at this mega support level, this long-term support level here, where even if you experience some downside, you just buy some more and dollar cost average in. You've got an incredible cost basis on what will probably be the best returning asset in history. It already is right now, but we'll see what happens in the future. Anything could happen with these investments, so keep that in mind. This is not financial advice, just my opinion, because people are asking me about this all the time. So long story short, the sentiment amongst people in real estate is wrong. Most buyers don't really understand what's going on. Most of them are way too bearish. They think that you can go from a mania to a crash just like that because the media has convinced them so. That is in fact incorrect. This is not what's going on. What is happening right now is actually a great time for people to look at buying. It's one of the best times we've seen in quite some time, as you could actually buy a house if you want to. without having to kill people to do it, without having to get into an insane bidding war and pure craziness to get a house. One of the few times in the past couple of years where that's, in fact, hasn't been the case in the past couple of years, the first time in 2 years that that's really been the case. And I can tell you from what I'm seeing and the conversations I'm having with buyers, as I educate them, as I show them the payments, as we talk about rates, as we talk about what's likely happening here, we showed you last week, big money is still buying real estate in a big way. And doesn't look like they have any plans to stop anytime soon. So the idea that all this inventory is going to crash the market from some direction is just, it's not founded on anything that makes sense. It's not founded on any principles of what's happened in the past. So until you start to see any of those things, and I'll tell you if I see those things, I'm looking for it. Believe me, I'm very much interested in participating in the real estate market on every level. So if anyone wants to know, it's me. I want to know if there's something really bad here that I don't see. If there's something really bad here that could hurt my investments, is there something really bad here that could hurt me or my family? I'm going to find it. And I've been looking, and I can tell you, it's not there. Want to get a quote? Want to see what's going on? Give me a shout. Shoot me an email. Text me. You can call me. A couple pieces of information. Get you a quote. No fees, no lender fees, no points. Nothing like that. Naked rates. Naked wholesale rates. That's what we got here. And I will hook you up. No problem. All right, you guys. Have a tremendous evening, and I will see you again soon. Take care.